Good morning, everyone. See, this is Srinath, founder of Spot Academy. See, Spot Academy is into stock market training. So we provide training on stock market based on technical analysis. See, technical analysis is the subject where people who are interested to trade or invest in stock market have to learn before investing your money in shares. Why? Because there is a big gap between fundamentals and technicals. So always technicals will lead ahead of fundamentals between 3 to 6 months. So that's why majority of the people who are getting success in stock market mainly concentrates on technicals. And also the advantages of technicals is you can see clearly what is happening to a particular stock on day-to-day basis through your charts, because technical analysis, the basic tool is charts. So for that, certain requirements are there, like any person who wants to enter into stock market, let him be or let him or her be a beginner or an expert. So these things are mandatory. See, before going in detail into the subject, so certain things are necessary, that is to get success in stock market. So one is complete knowledge of the technicals. See, how do you get this complete knowledge? So you can take this knowledge through a mentor, or you have to do self study. Only two options. So once you have this complete knowledge of technicals, then the second important factor is capital. There is good capital, because if you want to do full-time trading, leaving your job, then you should have good capital. So what is the good capital for trading? So it cannot be like 10,000 or 50,000 or 1 lakh. So at least 5 to 6 lakh rupees is the minimum capital required for a trader to become full-time. Then the next factor is discipline. So when you have knowledge, when you have good capital, so discipline will follow. So meaning it will not follow immediately once you have knowledge. Means you have to practice. So you have to practice day by day to attain that discipline. So it is not so easy, because basically I'm into this field from last 14 years. So it will take for any person, once he enters into stock market, at least 4 to 5 years to get the discipline approach to trade. So once you have that, that is not only sufficient. Next is patience. So patience is also required. So this is very important factor for any trader, because majority of the people don't have patience. So they don't have patience for not even for few hours. So then you cannot be a trader at all. So when you don't have patience, so you can't get success in stock market in the long run. So people have to develop patience. So that is very important factor. So the next factor is self-belief. So when you have all this, you have knowledge, you have capital, you have discipline, you have patience. But if you don't have your belief, self-belief, then you cannot grow. So this one also is one more important factor. Next is self-motivation. See, there are ups and downs in walks of life. So not only in stock market. So there is up and down in every individual's life. So same thing in stock market. So when there is upside, so we'll be very happy. So when there is a downside, so we'll be feeling very sad. So meaning how to motivate yourself when you are down. So that you require certain skills. So you have to develop yourselves. So when you are up, you will be very positive. So that's how you have to control. So those things will come under self-motivation, because nobody can grow in a straight line. So it is up-down process where you reach certain destination at end point where you will be satisfied. So that also you have to develop. So next is important thing, which is software. So we should have a paid software, not free software. Nothing comes free. Okay. So you have to have some paid software. So knowledge also you will not get free, not only in stock market, right from childhood. So when we want to learn, when we want, we'll join schooling. So there they won't provide free education. So we have to provide money. So meaning for everything you have to pay. So for knowledge, for capital to earn, for stock market trading, you should first work. Then you have to follow certain steps. So these things are very, very important factors before just simply doing trading or investment in stock market. So if anybody is following all these steps in his career of stock trading, then that person will get success. So this is what I keep saying for my students in my trainings. See, today, as per the topic, so it is gap theory. So what is gap? So gap is an area where prices have jumped on upside or they have given a price breakdown on downside. See, this gap theory can be applied from intraday perspective to long-term angle. So that is the advantage of gap theory. See, the topic is intraday trading, right? So gap theory using intraday. So when you have fixed your mindset for intraday trading, so what to do? How to trade using gap theory. See, for example, before taking the live trades, so I'll share across the recent trades in last 2-3 days. See, this is the trade on February 5th. So if you are able to see this, everybody is able to hear. So this is February 5th, 2020, Tata Motors. So let us take that February 5th intraday chart. So we have a gap. So now the first question is, what are the rules for this to trade this? See, these are the rules. The rules are like this. See, if anybody wants to trade using gap theory, time frame is 15 minutes. First candle high low difference should be 1 to 3% max. So first candle is nothing but 9:15 to 9:30. So difference of that high low should be 1 to 3% max. Then first candle high low difference gap for index, it should be between 0.3 to 0.6%. So if this condition is met, then people can initiate trades. And when can they initiate trades? Only by maximum 11 o'clock. So entry time is maximum by 11 o'clock. If this condition is met, you can initiate trade on either side. Okay, it's not only on long side, it can be on short side as well. So if there is a gap up, you can initiate long trade. If there is a gap down and by meeting this condition, you can initiate short trade. Then once you enter, you should know your target and stop loss. So target for intraday for stocks is 1 to 1.5% return. So once you enter, the target is 1 to 1.5%. So target for indices is Nifty, it is 40 points. Bank Nifty, it is 150 points. So once you have this condition met, target for Nifty is 40 points, 150 points for Bank Nifty. See, I have mentioned here, advise intraday trading only on trending days. See, no need to trade every day in the market. So only on trending days, if you trade in a month, that is more than sufficient to make good amount of money. Then entry time, we know before 11 o'clock you have to enter. Don't enter after 11 o'clock. Exit time is between 2:45 to 3:15 p.m. So by 3:15 p.m. your trades should be closed. Then given a stop loss here. See, stop loss is previous candle low. So that is your stop loss. See, one more criteria here. If first candle high low difference is less than 1%, what to do? So I told first candle high low difference should be 1 to 3%. If it is less than 1%, then wait till it crosses 1% to initiate trade. And that too, it should be within 11 o'clock. So this is how you can trade using the gap theory on 15 minutes time frame with these conditions. So let us take some examples here. See, we got a Tata Motors gap up on February 5th. So you can check here the first candle. So you can see clearly there is a gap up on first candle. See, the advantage of spider software lies here. So you can see clearly the gaps. So in free softwares or some paid softwares, because I'm using this spider from last 13 years. So I know the advantages of using this software. So there is a gap up at 9:15. See the difference between high and low. High is 171.35. Low is 166.6. So difference is within our limits of 1 to 3%. So once you have this condition met, so our condition is met, 1 to 3% max high low difference. So you can initiate trade keeping previous candle low as stop loss. So this is your stop loss. So the previous candle is this one. The low is 165. So 165.15. So you can initiate long trade at 9:30. See what happened next is an history. The prices went on making higher highs. So till 3:15. After that, there was some profit booking. So this is based on 15-minute gap up with condition met. So this is one trade we got on February 5th. Next, we got a gap down on February 7th. The first candle, there is a gap down. See the difference between high low. High is 177.75, low is 175.2. So it is within the limits of 1 to 3%. So you can go short keeping this high as stop loss. So this candle high is 179.15. So this is your stop loss. You can initiate short trade at 175.85. So this is the candle you can short. See what happened at 245, 315 range. So 3 o'clock, this is 3 o'clock, 315. This is last candle, 330. So prices came down from 175 all the way up to 173. So which is reaching our targets of 1 to 1.5%. So after giving a gap down, prices came down till 330. Next, same stock on February 11th, it gave a gap up. So this first candle 9:15 to 9:30, high to low, it is almost 2 rupees 70 paisa, which is within the limits of 1 to 3%. You can go long keeping this low as stop loss. What happened next? Prices went up, but see the targets here. In the third candle itself, see the close of this is 170 to 90, high at 10 o'clock is 175. So it has already produced 3 rupees returns from 173 to 175. So it has reached your intraday targets. So once it reaches here, people will start exiting. So that is the next trade. Then after that, so today it had a gap up. See the difference. So 171.7 to 173.3, which is less than 1%. See, today we had a gap up in Tata Motors. 173.30 is the high. Low is 170, 170. So it is less than 1%. So difference is 1.6 rupees. 1% is 1.7 rupees. So it should be 1% or more. So what happens when we have a less than 1% gap up? We won't initiate trade. So what happened? Immediately it came down. The immediate next candle, it came down. So that is the strength of 1 to 3% range. So this is today's. So no need to initiate trade at all. If for example, take recent next trade, Reliance on February 4th. See, today also it had a gap up here. Reliance Industries has a gap up today. High is 1470 first candle, 1455 is the low. Difference is 15 rupees, which is 1%. So people can initiate trade today. This is live. Stop loss is this one. So 1469.9. So you can initiate trade. Any dips from 1469, it is a buy. So Reliance is in buy mode today. So if you go to February 4th, so we had a gap up. So this is the gap up first candle. High is 1415.6, low is 1397.8. So it is 1% gap. So what is your duty? Go long, keep previous candle as stop loss. This is your stop loss, and 1%, 1.5% is your return. So you got that return on February 4th. So till 3:30 it went up. So this is Reliance Industries on 15-minute scale. So same Reliance Industries short trade we got on February 7th. The gap down. Gap down first candle. So the difference is 1452, 1446, 6 rupees. See, in this case, we don't have 1%. So when you don't have 1% in the first candle, what did I say? You have to wait until it gives 1% downside for shorting. First candle, no short. Second candle, 1443, 1452, 1443, which is 9 rupees. Still no short. Next, 1442, no short. 1440. So difference is 12 rupees. Now it is getting closer to 1%. So wait for another 2 rupees. 1438. Now there is 1% downside. So at 1045, short is confirmed. You can go short in any candle, in green candle or red candle. So you had got a green candle now. Immediate next candle was a green candle. You can go short at 1444. Stop loss is this one. So 1460 is your stop loss. Short at 1444. Let us see at 2:45, 3 o'clock what happens. So this is 2 o'clock. At 3:15, stock is at 1434. So people who shorted at 1444 got 10 rupees by the end of the day. So meaning, so they made money. So once you get 1% gap down or 1% gap up, so there is a trade with previous candle as stop loss. So it is giving money. So next is February 7th UPL. See here, I am observing. Say I'm showing you through charts. Here there is no interference. So I'm not watching any TV or any news channel, or I'm not any listening to anyone. I'm just following the chart. So that is the advantage of technical analysis. So once you have complete knowledge, I think you will just do your work silently, whatever the chart says. No need to take the help of anyone once you have complete knowledge. See, this is UPL on February 7th. First candle, 538 low, 547 high. Difference is more than 1%. So you can initiate long trade. So stop loss is previous candle low at 535. So buy at 545. Keep a target of 1 to 1.5%. Next candle you can buy. So what happened? So by the end of 2:45, 3 o'clock, let us check. Or if you have got 1 to 1.5% before that, you can book it off. See here, we bought at 545 or 546, wherever. 555 is the high. So you got 2%. So people would have booked already by 1045. So taking a trade at 945 in 1 hour, you complete your job. So that is UPL on February 7th. So next day you had one more gap up. So your next day, one more gap up. Difference is, once again, it is more than 1%. So you can initiate long trade. Stop loss is previous candle low. So this is your stop loss, 540.45. What happened? Let us see. Have you got 1% from the entry level? So 560 is the first candle closing. So 560 means you should get 565 to 567. That is the target. See, this candle you got 568. So already 1.5% return done at 12 o'clock. Or if you want to still carry the profits, you can do other technicals like trailing stop loss methods. See, this stock ran on the upside further. So how to capture this? That is only through trailing stop loss. And if you are happy with 1 to 1.5%, you can just close your trade after 1 to 1.5%. So this is on February 10th, UPL. See, these are all the trades we have already seen. That is past trades. How is the accuracy? See, current trade, today live trade is Reliance is running. So Reliance is running with a gap up. Bank Nifty is running with a gap up. See, now I'll take Bank Nifty. First candle, gap up today. High is 331,554. Low is 31,398. Difference is how much? It's almost 150 points. 150 points for a 31,000 script, which is less than 0.5%. Is it under our conditions? See, the condition is 0.3 to 0.6%. Yes, it is under a condition. First candle should be between 0.3 to 0.6%. So the condition is met. So people can buy Bank Nifty on red candles. Next candle is a red candle, you can buy. Next is a red candle, you can buy. So now it is running on the upside. So keep a target of how much for Bank Nifty? 150 points. So from the closing level, that is 31,532, first candle, add 150 points to that, which is 682. So that is your target. Has it reached now? No, it has reached 579, still not there. So that is your target for the day. So add 150 points to the closing. 532 plus 150 is 680. So 682, that is your target, which is running. So Reliance is running, Bank Nifty is running. For example, Nifty also had a gap up the morning. 12,209, 12,144. So difference is 65 points. 65 points for a 12,000 script, which is more than 0.5%, correct? Or almost 0.5%, which is in our limits, 0.6%. So take a trade on red candle. So if you take a trade here, so the target is how much? 40 points. So 40 points from closing, 12,206 plus 40, 12,246. Has this reached? No, waiting, 12,227 now. High is 12,227. So just hold. So people who have initiated trades, so they keep holding for the targets. That is 40 points. So this is running right now. So Reliance is running, Nifty is running. Let us check ICICI Bank. ICICI also had a gap up. First candle. See, the difference is very small. It is not 1%. 546.90 is the high. Low is 544.60. Difference is 2.3 rupees. We won't buy. Next candle. Down, down, down. So we don't buy until it crosses 1%. Okay, so that is the trick here. So as it is less than 1%, no need to buy. ICICI Bank. Just because of gap up, no need to buy. Or you take Axis Bank. So there is no gap up. So how do you identify? So keep running your cursor just based on your you can shortlist. See, there is a lot of advantages in Spider. You can do your own user list. You can create your stocks and you can keep tabbing. See, there is a gap up here, which is this Adani ports. See, there is a gap up in Adani ports in the morning first candle. The difference is 3 rupees 90 paisa. So 378.9 and 375. So 3 rupees 90 paisa, which is more than 1%. So this is in buy. So where is the stop loss? Once you get a buy, immediately stop loss here. So that is where majority of the people fail because they know how to buy. They don't know how to get out because they don't keep stop loss. So stop loss is very, very important. So if you keep practicing this out of 100 trades, I think if there are 20, 30 trades stop losses, no matter. But other 60, 70 trades would have given a lot of profits. See, right now it is in buy mode, other reports. So this is your stop loss, so it is in buy mode. See, already in last 1 hour, so just we started half an hour back this seminar. I think we have got 4 trades. So Bank Nifty is in buy mode, Nifty is in buy mode, Reliance is in buy mode, other reports is in buy mode. See, this is Abuja cement. Yesterday gap up. So you can see clearly. So there is a gap up here yesterday. See the difference 208, 212, 4 rupees, which is 2%. So you can buy at 210.75. What happened by 3 o'clock, 2:45 to 3 o'clock? See, this is 230 candle, 213. So you got your returns. So yesterday it has given buy. See, this is one more Bajaj Auto. So there is a gap up here in the morning. So the difference is 51.84, which is 1%. So it is in buy mode. So this is your stop loss. This is Bajaj Finser. Gap up. First candle. 9738, 9840. So difference is 102. So it is in buy mode. So one more clue in gap theory I will tell you. So whenever there is a gap up or gap down, only initiate trades when there is a decent gap up. Means there should be a decent gap between the previous candle high and the next candle opening. See here, this gap is a very thin gap. So thin gaps don't initiate trades in that counter for that day. So there should be decent gap. So now how we saw the other stocks. See, this is a decent gap. So there is a decent gap up. Don't trade in thin gaps. See, Bajaj Finance yesterday it gave a gap up. So still it has not covered. So yesterday the difference was why this gap up did not give money yesterday. Why? Because first candle difference is just 36 rupees. 36 rupees is less than 1%. We want more than 1% in the first candle. So if it is not giving 1% in the first candle, what we do? We wait for few more candles till 11 o'clock to get 1%. So where we got here, I think 36 plus 47. So in this candle, exactly 1%. So after that, till 11 o'clock, it was sideways. Then after that, some kind of a retracement, then some kind of move, up move. So nothing happened. So stop loss did not come. So still it is in buy mode only. So today this is Balkrishna Industries. Gap up. It's in buy mode. This is Bank Nifty. Still target 600 and 600 plus is waiting. See, this is gap down. BHEL. Today gap down. High and low is more than 1%. So you can go short at 37 rupees. So already it has produced 50 paisa profit from first candle. 50 paisa is more than 1%. So BHL is already given targets. See, the low was 35.95. This is gap up, Biocon, 306.5, 311.9. So difference is more than 1%. So people will initiate long. See, we had a gap down in Indus India Bank today. Oh, high was 1281, low was 1251. What is the difference? Which is 30 rupees. 30 rupees, which is almost 3%. So we don't go outside the range. So this is a big gap down. Whenever there is a big gap down, so no need to short. And also the color of the candle plays a major role. So whenever there is a big gap up, big gap down, color of the candle is very important. When there is a big gap down, if the color of the candle turns green by the end of the 9:30, then don't short because there will be short covering. That's what happened here. There was a big gap down, 3% gap down. What happened? It covered that gap in the fourth candle. See, this gap was covered. So that's why you have to follow the rules. Where it is opening, is it with a big gap? Because already people who have bought yesterday or who have shorted yesterday, they would have made huge money. So that is common sense. So you have to use common sense at times when there is a big gap up, gap down. Don't be in a hurry. So that is one more thing in trading. So wait patiently at least till 10:30. Okay, you'll get good trades. So after the gap up or gap down, wait patiently till 10:30. You'll get good trades. After that, you can initiate trades. I think majority of the trades which have given money are same category. So for example, Bank Nifty here on February 4th. So if you have waited half an hour to 1 hour time frame, that is more than sufficient. See here, 4 candles, 1 hour. So 10:15, you can start initiating long trades. Yeah, after that, good things happened in that stock. See today also patience for 3-4 candles. See, we know gap up is there, but still you should have patience for few more candles. What happens? Now it is running on the upside. See, our target is closer by now. Bank Nifty. We had a target of 31,620. So it is 588 now. So it is giving your targets of 150 points. So this from 530 to 620. Almost now 530 to 588. Already 50-60 points done. So keep holding till the target. If you are an intraday trader. If you are an intraday trader, if your target is not coming by 315 or 320, 150 points, what will you do? You have to close your position wherever the profits are. It can be 100 points or 120 points, whatever it is. Only if you are positional trader or a swing trader, we carry positions. But if you are a full-time intraday trader, then you have to close your positions before 3:30. That is discipline. Not like you fix your mind like I am an intraday trader, but you carry your position for next day or next week because it is in loss. No, you have to close your positions. That is very, very important. See, this is one of the queries you can do in Spider. So right from event, there is event selector. You can select based on your query. See, I have selected open gap up. So what are the stocks which are opening gap up? Are stocks which are opening 3% above? This is the limit set here. You can change it. So I can set open 1% above. So based on that, you can get the results. So bullish, bearish, all kinds of things in event selector. I think complete information you can get it from the Spider people. So regarding how
Mm.
to use and how to run queries. So there are technical queries. So there are market queries. So you can utilize to the full extent. And
Sir,
that, yeah,
so just one second. There is a question. Can you repeat stop loss and target?
yeah. See, stop loss is the previous candle. So there is a gap of first candle, 9:15 to 9:30. So stop loss will be previous candle, that is 3:15 to 3:30 candle low. That is a stop loss. Target will be 1 to 1.5% intraday. For stocks, it is 1 to 1.5%. For indices, Nifty, it is 40 points target, 150 points target. Stop loss is same, previous candle low. See, we did not initiate this trade. Why? Because ICICI Bank today gap up. Because it is not 1%. The difference between high low is not 1%. So difference is less than 1% means don't enter at all. Only the difference, see like this. See, yesterday ICICI Bank had a gap up. So difference is more than, see the gap here 542, 537.5, 2.5, 5.5. So exactly 1%. So people initiated long trades at 541.35 or low, then 544.80. So they got few points. That's it, not 1% yesterday. But it did not give any loss. See, this is your stop loss. Stop loss did not come. So that's what the trades are running. Nifty, Bank Nifty, Reliance, Adani Ports. So all are running. So that's what I have discussed now, strategy.
Yes.
So if you people are having any doubts, you can just ask questions.
Yeah, there is a question.
Hmm.
Sir, there is a question.
Yeah.
Is it
Hmm.
applicable for all script?
Any script, any equity script, any commodity, any currency.
Okay, so there is a question. Could you please repeat the strategy?
Hmm. So strategy is very simple. Just you have to wait and watch which are the stocks which are giving gap up in the morning at 9:15. So that is the first step. So stocks which are giving gap up at 9:15. So once you are identifying that, watch the difference between high and low of the first candle 9:15 to 9:30, which is within the region of 1 to 3%. So if stocks are giving a gap up of 1 to 3%, then you can initiate trades in that for the intraday basis for a target of 1 to 1.5% with a stop loss of previous candle low. So this is your previous candle low. So this will be your stop loss. If you are trading index, then the difference between the first high and low of the candle of 9:15 9:30 should be 4.6%. That is 0.3 to 0.6%. So if index opens with a gap of 1%, gap up of 1%, then don't take trades. Only it should be between 0.3 to 0.6%. Keep previous candle low as stop loss and wait for a target of 150 points in Bank Nifty, 40 points in Nifty. So that is a strategy.
Okay, so one more question. When to initiate the trade if the second and third candle is red?
See, best time frame to initiate trade as per the strategy is after 10:30.
Okay. One more question. What about volume in identifying among gaps up stock?
Volume should be
What?
higher. First 15-minute candle volume should be higher than the previous candle volume. That is the criteria. So your example here. So this volume, first candle volume of this is higher compared to this. So this should be the thing. For example, yesterday, gap up, higher volume compared to yesterday candle. So you can initiate. And first candle, preferably for long trades, it should be green candle. Preferably for short trades, it should be red candle.
Yes, sir. There is one more question. Uh,
Yeah.
Gap of first candle open and P close limit.
Hmm. I didn't get the question.
Okay. Gap of first candle open and closing close limit.
Hmm. Open and close limit, huh?
Yeah.
Make much difference. That's why I told it should be green candle. See, the open of this candle is 31 for 41. Closing is 31 532. So closing should be higher than the open and with a good decent body.
So one more question. Do we need to take care of resistance level after gap up?
Yes. If see in spider we know we use control G. See this, if it opens first candle at R4, then no need to take trade at all. The R4 is too far away for Bank Nifty. See it has opened at R1. So preferably at R1.
So anything else do you want to share with our?
Yeah. See, this is just one of the techniques. So yourself can create your own strategies when once you have complete knowledge of technicals. See, this one is my personal technique based on gap theory, what I keep doing for intraday trading and as well as for positional. So for positional and swing trading and long term, so there are separate setups. So this is just an intraday setup I keep using in my tradings. See, if somebody wants to excel in technical analysis, you can always visit our website and check what we provide. This is our website academy.in. So these are the courses. We have three levels. Level one is for beginners along with futures and options. Level two for technical analysis using Dow theory. Level three for advanced technical analysis using Elliott and Neo theory. So if anybody is interested to learn completely and do independent trading, so you can do independently trading yourself once you have complete knowledge of the subject. So, so that is what we are providing from Spot Academy in the last 7 years. So if anybody is interested, you can just walk into our office and you'll get all the details. So that's it from my end.
Okay, so I hope everyone is clear with this strategy. For furthermore, you can contact directly to Mr. Srinath, and we will end this webinar right here. Thank you, sir, for joining with us.
Thank you.